All right, all right. We're gonna be going over just recapping the trap video, right? This is the video that I posted and I sent to some people on the traps, how to identify them, how I enter them, the areas that I look to hold, um, and just where my entry would be, areas that I look to hold above or below based off of the type of trap, where my stop loss would be, and then I pulled up the daily chart and then went over the daily chart on the trap that I was seeing that was potentially forming, but did not trigger until later on. Right, this is potentially forming here. This is not completely a bull trap. It's in the bull trap zone, which I go over, and then I also go over exactly what I'll be looking for. And if you watch the original trap video, it shows how my entries on a bear trap would be entering one tick above or a couple ticks above the EMA closing above it, right? And that's what I went over here, right? So strong move up, shallow pullback, higher high, pullback below the shallow pullback, which was right here, or the pullback. That's where I have my line drawn across. And then we close above the EMA here. This line above here represents the entry. The line below it represents the prior swing, which we would like to stay above in order to continue to get that continuation, right? Profits at the high, and then runners can run. This line here at this prior swing,
Manage that trade to put your stop loss.
There we go. We'll move my mouse out of the way. As you can see, the prior swing, we stayed above it. Remember I mentioned if you close below that prior swing on that line across here, this line, if you close below that, you got to start questioning, is this setup still valid? It's still valid. It hasn't broken structure yet, which would be down here. That would continue to pull back maybe even further, maybe a higher time frame trap setup, pullback. But generally speaking, in a trend, this is how I look to enter for the continuation and have my stop losses set at structure, as well as trying to get a higher probability of continuation, and also areas where I can sit and watch to see if they hold for that continuation, right?
But
so if we go forward here, we're going to go, I think it's about 12 minutes in.
Have to stay higher or make this
right here.
Bigger.
So we're going to play this for a moment.
So we're going to thicken this up just to make it visually.
Not sure if you can hear the video too well.
If you will. All right.
If you haven't watched this video,
We're up
I
here.
suggest watching this video prior to
Strong move down.
watching
Right. That is a very
the one I'm
strong
making
move
right
down
now.
here. From there, we pulled back. I'm sorry, let me adjust this properly. Strong move down from the high to here. Then we have our pullback to right here. Now we have our lower low. See that? See the white lines? Strong move down, pull back, lower low. From here we pulled back above the shallow, the previous pullback, the previous swing, right? So from here, anybody that is going long above here, they're potentially trapped. We're not going to say they're 100% trapped, but they're potentially trapped.
All right, so we have our strong move down, pull back, lower low. Price pull back above the pullback here. And then I'm saying potentially everybody that is getting long above this level here, this thick white line that I drew across, anybody going long above there potentially could be trapped. Hasn't triggered yet, but that's where the rest of the trap scenario comes into play, right?
This is going to be the previous swing now that we're watching. We're going to want to break. Oh, but hold on. Let me backtrack. Strong move down, pull back, lower low. Pull back above the previous swing, the previous pullback here, potentially trapping in sellers. We don't have a confirmation yet. But what did we just do? We separated from the EMA. Look at this separation from the EMA.
That was one of the rules with the trap, is separating from the EMA. As we're pulling, we're the most immediate trend is down, right? We're in a bullish market overall, price is going up, but the intermediate trend is bearish, right? This is the most immediate trend we're playing off of right here.
And that's what I really want to like drive.
And we separated from the EMA
today. Drive this one home. We're separating from the EMA. The EMA is right here. That's a 21 EMA. We're starting to separate from it. So from here, in order for this trap to get confirmed and get an entry, we're going to need a candle that closes below, a red candle that is going to close below the EMA. A strong bearish candle closing below the EMA, right? We're not going to get it all in one. Maybe we'll get it today all in one. But the reason why...
So the entry setup is, that was explained in the other video. A close below the EMA, and then I enter with a sell stop order below this candle. That will trigger the entry on the bull trap. Remember, this is a bull trap because the bulls are getting trapped up here. Entering, but if we get a strong candle closing below the EMA, and then we get the next candle to break below the low of this candle that closes below the EMA, that's the entry setup. Stop above here, and we would look to hold this prior swing. Hold below. If we retrace, we want to hold below this prior swing, discussed in the previous video.
Why we want a strong candle closing below it is because we need to know where our entry is going to be, right? And we'll enter one tick below that, right? This would be entry. And then our stop loss would be above here. And once we get entered in here, right? Once we get entered in, we do not want a candle, we do not want to see a green candle, or any candle for that matter, closing above here. Once we start seeing a candle closing above the swing, then we got to question, all right, is this setup still valid? Right? If we get a green candle closing above this prior swing, we have to question, is this setup still valid? Of course, like I said before, you can go ahead and enter this and then zoom in on a 4 hour, 1 hour, because this is a daily, and then go ahead and determine where your risk is going to be. You might find something that will invalidate this setup on a faster time frame. But right now, I'm looking, since we're up here, I'm looking for sellers to start coming in, start loading up into some positions, and buyers, as price goes higher. We could still break above here, right? This would cause another trap up here, more sellers or more buyers above this swing. If price moves up there, we could also trap more buyers above here. But at the moment, we are potentially, it's not confirmed, potentially trapping buyers above this swing, that shallow pullback before we made that lower low. So everybody up here potentially is getting trapped. We know there's going to be, if this happens.
So what we're saying is, you have your strong move down, pull back, lower low, pull back. Now we pull back above this swing here, potentially trapping in these buyers up here. Once we get a strong candle closing below the EMA, the entry is going to be the next candle that breaks below the low of the candle that closes below the EMA. Hi, kitty. You're gonna so if we get a candle retracing and then we close above this swing, It does not mean the setup is invalid. It just means you got to start analyzing on a faster time frame to determine whether or not the trade is still valid, right? Stop loss above the high. We're going to look for continuation. Once this triggers, ultimate target is a new low. That's the ultimate target. We're talking about a daily time frame here. So
strong
doesn't mean we're going to hit it,
below
especially we have the range here.
We enter 1 or 2 ticks below it, so we know we're continuing the move. The move wants to continue. And then from there, we want to make sure that we do not close above this swing, right?
So we go over that for a while.
So
Then we go on.
With that being said, if we get a trap triggered and an entry, technically an entry that would trigger, I'm not saying I'm taking it off the daily and swinging this, but if we get an entry that's triggered, I'm going to look for price, and I'm going to look for sellers to see if sellers are wicking price down, bringing price down. Every time buyers try.
So then we go over just how I'm going to be looking on the footprint charts, on the intraday charts to determine what's going on. So let's zoom in here. We'll get rid of this. Not sure if this is that messy, but what we'll do is we're going to make these a little bit easier on the eyes to see because we have a lot of white. I know I do a lot on my daily chart here. We're going to make this 4 in pink, right? 4 in pink. This is our prior swing here, right? All right. So make these a little bigger, a little bit more visually appealing. Okay, strong move down, shallow pullback, right? Should we draw that on there for you guys so make it easier to see? I know I got a lot going on in this chart, but this is how I look at my overall sentiment, right? So we have our strong move down, we have our pullback here, we made our low. Here, and that's where we are at right now. We'll get rid of let's get rid of some things on here to make it easier for you to see, right? So you're not distracted. All right, there we go. Exactly what you saw on the other chart in the video when we just started to break above this swing. I was looking for the trap. It does not mean that it is going to trigger. It does not mean that it is going to trigger. It just means that potentially there's going to be buyers getting trapped there. So, pull back, lower low, pull back above. Now we're looking for that strong close below the EMA, right? Strong close below the EMA. Okay, strong close. If you have a red candle, this is where you get to determine what a strong close is. If you have a red candle like this with a tiny little wick coming off the bottom, is this a strong close, right? We'll say that's the wick. For some reason it doesn't want to bring it over for me. Let's see if we can do it right here. There we go. Is this a strong close? Yes. We're closing majority of the candle. If you take the candle and split it in half, right? We're closing below 50% of the candle. If you take the candle and you split it into quarters, we're closing below 3/4 of the candle. That's a strong close. Now, if you have a candle that closes like if you have a candle that closes like this, Is that a strong candle? This is 50% of the candle, which means 50% of the, so it wicked down and then 50%, we closed above 50%. I want to close as low as possible on that candle to confirm it being a strong candle. If you see, you're going to have to determine what a strong candle is. I look at this as a strong candle. I look at this as a weak candle. I don't feel comfortable taking a trade breaking below this wick. I feel comfortable taking a trade breaking below this wick. So let's see why I chose the levels. And this is where you're going to have your own thoughts on what a strong candle is. So we come up here, start chopping around, sellers are trying. Notice we're now breaking below this swing. Sellers close below the EMA right here. We close below the EMA right here. See that? We close below the EMA. That's the body though. We closed actually right there. See that? But where did we close? We closed just shy, just below. If you break this candle in half from the high to the low, this is about the middle, right? That's about the middle of that red candle. We're talking about this one right here. See the mouse where it's on? The middle of the candle is there. We're just closing about the middle of the candle. Look at this wick up. Look at this wick up. I do not like that. That's not a strong bearish closing candle. Because that means sellers brought it down and buyers are trying to reject it up. So I wait. Don't jump to conclusions. I wait. I waited. The next day, we have a trap. Triggered. If you took this candle here, if you considered this a strong close, you got triggered into a trap. It would have worked out because price never rejected and reversed above our stop loss. Because remember, this is the stop loss. And you want price to stay below. And then this is our entry. So if we use this red candle closing below, it would have worked, but it doesn't have a high probability because it's not a strong bearish candle. It's not a candle closing near its lows. The lower this candle closes near its lows, the stronger it's going to be for the move. So what we'll do is we'll wait, which we waited. We pulled back. Where did we pull back to? Once we broke this, where did we pull back to? Look at this. Pull back to the swing. Remember I said in the video that if you start getting candles that close above, you got to start questioning whether or not the trade is still valid. Once we start closing above this swing, you got to question, is the trade still valid? It still is because your stop loss is here at structure of the trap. That would be a failed trap. But for this argument's sake, we are closing below. Beautiful. That's what you want to see, which we discussed in the previous video. So now that we close below, we start getting this strong candle selling down. I did not short, really, until we started to get down here. I started to short looking to break this. But what is this level? This level is 140. If you zoom in, it's 140. So we break, and now that triggers the trap. This triggers the trap. Once we broke below this wick, because I consider this a strong bearish candle. Even though we closed here, look at this wick down. We came up, retested, came down. We closed here. We closed this candle, even though it's a bullish candle, and I would prefer to see a red candle, we closed below the EMA 2 days in a row after a big, strong wick down. We opened here. Price eventually came all the way up to test this swing, and then we closed here, right? So I know that this spot here is going to be where there's a lot of buyer stop losses, and all of these buyers that are buying up here are praying and hoping that their stop loss down here is going to hold. We break below, and we started to dump the other day. We dumped down. Look where we retested. Almost up to 140. Almost up to 140, didn't hit. The next day we hit 140. And then today, non-farm payroll, what did we do? We sold all the way down to the bottom of the range. We ticked through just barely, and then we closed right at the lows. So that's a beautiful trap. Wanted to go over that. I look at this on the daily, and I try to use this to say, okay, who is going to be in charge, right? Rejecting off of this swing and staying below, I say to myself, as long as we stay below this swing, which is around 19,700-ish, the zone here, as long as we stay below this, I'm still looking bearish to see if this trap will trigger. Once we triggered this trap, I was only looking short. I am no longer looking long on the following days, right? I was short here, and then we retrace. I'm no longer really looking short. If I am going long, it's a scalp on a retracement, but I'm looking for that continuation short. And that's what we got here. We got a lot continuation shorts. We did get some longs. There were a lot of good long setups, right? But once we rejected that 140, now I know right here at 140, I am not looking long again, besides this range here. If we take today's candle out of the equation, I would need this to break and hold above this trap entry, because I know there's going to be more shorts, which we saw here. Now we know that there's shorts that came in here, and there's shorts that came in here. I would need this to come up, hold here, create a bullish structure, creating higher highs and higher lows in order for me to start looking long. Ultimately, I would love to see price come all the way up here and then stay above this area. First it would stay above our prior swing, right? Stay above our prior swing, and then I would like it to stay above here. So those are the zones that I'm playing off of, right? That's the trap zone. So while this, range and cost basis and everything else is going on, I'm watching this trap that's playing out, and it's currently still short the market. We are at the bottom of the range though. If we didn't have a range here, I would still be looking short. But since we're at the bottom of the range, that's a good target area for profits. Target area for profits would be top of the range. If it retraces and you get back in, top of the range, middle of the range, bottom of the range. So that's what I wanted to go over. It was just, I can't predict the future. That's why I have entry. That's why I have specific entry criteria. My entry for this short to get triggered is here. Profit targets. I have designated profit target areas. I have designated zones and levels that have to hold, right? So obviously my entry level here where the trap gets triggered, it was a triggered where that holds, that has to hold. Then I change my sentiment if it breaks. I change my sentiment even more if it breaks here and here. But I wanted to go over this trap because it played out perfectly. Doesn't always play out perfectly. It's just nice to see when price action is playing appropriately and you're on the right side of it. And, we went over the trap a bunch of different times. I drew it on all different time frames. Now, if I zoom in here, let me see if I can find my 4,000 tick chart. This is my 10,000, right? We have, let's get rid of these zones here. I was just doing something with that. We'll get rid of this. This is our breakout retest zone, which we broke below, right? This is our breakout. We never retested it, came back, retested it, didn't hold, we're breaking below. So I'm gonna get rid of this one. All right, these purple lines, these pinkish lines are the same lines that we have here on this chart. It's just on a 10,000 tick chart. So you can visually see it intraday on what was going on. Let's zoom this in a little bit more to like an 8,000 tick chart. Now, our trap trigger is right here. What happens when we trigger that trap? At that 140 level, we dumped through hard. We were dumping all day, right? We were dumping all day, but they held. Once they broke it, they tried and then stopped them out. And then we finished the move off. Where did we go retrace to? Our entry. This is the entry on the trap. Entry on the trap, entry on the trap. Held it when we retested and sold off more. Stop loss up here, stop loss up here. This here is the swing. This is the prior swing. If I bring this over, you can see this is the prior swing. Prior swing. That's the one that we broke above. And what did we do when we started to sell off? We were holding below it, right? When we started to actually sell off and on the daily, start getting those closes below the EMA on the 28th, 29th, 30th, 2nd, and 3rd. So 28th breaks below, 29th holds below, right? Remember, I said, if you picture this as the daily chart, you don't want those candles closing above here. If you get the candles closing above here, you know you have to start reevaluating to see if this trade is still valid. But we held below that prior swing. We held below the prior swing. Once we got that trigger at the 140, we broke down, came back, we stayed below it, and then I got the continuation. This is just an 8,000 tick chart. You know, you can do this as a 5-minute chart, however you want to do it. But it held. And it played out perfectly.
Playing from Pixel 6 Pro.
Yeah. Go 20 days. There you go. If you wanted to look at the daily and, you know, execute more off the 5-minute and watch your 5-minute time frame, you know, this is the prior swing. This would be stop loss. Entry below here. Once we got that entry below there, see a nice stop run. Nice little stop run. Nice stop run through. I drew this zone on here the other day, and I know I posted it before, and I said, you know, I'd be careful as this was retracing up. I said I'd be careful in this zone because we broke below. This is the trap zone, the trigger, and you're going to expect to have more sellers sitting in this zone that didn't get in on that initial move. And they got in, and then when we came up, you got even more in, then we got our continuation. So I just want to go over that. That is the trap. That is the trap, and you know, you can look back at the tick charts. You can kind of, you know, you can correlate it. That's what I say. Zoom in on the faster time frames, and you can see these traps on the daily to get your sentiment and your levels and play off of them. And that's exactly what I did all the way down here. Now that we reached bottom of the range here, profit taking. Ultimately, target is for the bears on this trap. These bears want to take out this low. That's the ultimate goal. Start breaking structure and continuing a move down. But play it smart. Have areas of profit for profit targets. Mine, top of the range, middle of the range, bottom of the range. Now that we closed here towards the bottom of the range, I'm expecting, if we continue to break down and disrespect this range, I mean, we could disrespect it. But this is cost basis. We might get some profit taking, new positioning occurring in this level. But I just want to go over that. The daily trap. What we were looking at it when price was right about there, right? That's where we were. That's where we were at right there. Right here.
Try to bring it
So,
up. Sellers are.
That's it, guys. Hope this helps you guys. Hope it's, kind of helps you see the market a little bit differently. Doesn't always play out, but, when it does, it pays very nicely because you have those buyers on the wrong side of the move and all these buyers coming in here on the wrong side of the move. And when they finally get stopped out and they hold below and sellers really defend that area, you get the nice big continuation. And usually it pays very well. And if you have runners, those runners will pay very well as well. But that's it, guys. Hope you have a good weekend. Later.